What is going on?
Yeah, well, this is a pretty big move for Alibaba. As you noted, since the April fine, Alibaba has made its first, most significant management change. Maggie Wu, who has been with the company for 2015 and who led its IPOs in New York and Hong Kong, is stepping down in April, and she will be replaced by Toby Xu, her deputy right now. Toby comes from PwC. He's been with the company about 3 years, and he's got an uphill task ahead of him.
So you guys heard it there. Alibaba has made a fundamental change to its management team, replacing its old CFO with a brand new CFO who's been with the company for a little while. However, they are now taking on the CFO role, which is an important role in the business. And what's more important is that they came previously from PwC, which is one of the 4 largest accounting firms in the world. So it adds a lot of credibility. So this kind of gives investors a bit of relief, a bit of confidence in Alibaba's financials, at least going forward, because now you have someone that has experience in a respectable accounting firm running the financials of the business, and that kind of reduces fears that this could be the next Luckin Coffee. Now, after what feels like a lifetime of this stock going lower and lower, day after day, week after week, it's finally showing us some signs of life here. Investors were thrilled with this news on the CFO change, and it contributed in driving Alibaba stock up over 10% in a single day. Now, when stocks enter a bear market like what Alibaba is in right now, you see aggressive selling. However, when you see rallies, they can be just as aggressive. And you can see something like this 10% in a single day, which is typically not what you see for a company that's a few $100 billion market cap. But now the question you're probably asking is this a rally today sustainable? Have we finally put in a bottom here for Alibaba stock? Well, you see, the CFO change was actually just part of some good news that we got here on the weekend. It was actually something a lot bigger, in my opinion, that gave investors confidence to re-enter the stock once again. Now, you guys know, if you've been following Alibaba, there's been chatter all over that this could get delisted because there's other Chinese stocks getting delisted. Alibaba could be next. And finally, we got some clarity from the regulators in China on this matter. The CSRC is the China Securities Regulatory Commission, and they were asked by a reporter on this comment regarding the SEC pushing to delist Chinese companies in the US. The response was interesting, and they stated that China respects its companies' decisions to list overseas, and in regards to the VIE structure, which has been under heavy criticism recently, as well as delisting, they believe that the media apparently has spread a lot of FUD and is completely misunderstanding and misinterpreting the situation. So that was some really good news, but can we really take this for face value? If you're familiar, Didi was just asked to delist from the US markets from China themselves, and this has people scratching their head questioning, are they really free to list in the US, or is this just a PR stunt? It's impossible for me or really anyone here investing in Alibaba to comment on this unless you're on the in there with the Chinese regulators. However, what we can do is just draw some differences between Alibaba and Didi and try to understand why it's not the same situation for these businesses. In my opinion, Didi was a very unique case, and it was handled very poorly by the company, and there was just a lot that went on behind the scenes, which has eventually led now to its efforts to delist. Initially, when they planned to go public in the US, China told them, hold off, do not list just yet. We're concerned about, releasing user data, all that kind of stuff. China's not very comfortable with that, so they told them to wait. But Didi is like, meh, we're just gonna list anyways. What's the worst that can happen? So they listed. That angered China, and that has kind of been the real sticking point throughout this whole last few months, where China has been cracking down on business after business, industry after industry, and Didi has just been the poster child here for all of this. But now, the Didi's delisting, China told them get off the US market right now, and they're doing it. Does that make China happy going forward, and are they satisfied right now with all of this crackdown? The thing is, BABA, JD, Pinduoduo, a bunch of other companies have been listed in the US for many years, and there's been no issues with China having them listed in the US. There's never really been talks about China saying, oh, you gotta delist if you don't do this, or you gotta delist if you don't do that. It's never really been a concern for those businesses. Let's also not forget that Alibaba announced they would be donating some of their earnings and cash to Chinese initiatives, and it's a big donation of $15.5 billion. But I see this almost as like the cost of doing business in China with US listing privileges. So Alibaba is kind of on good terms with the Chinese government, with the Chinese regulators. They're in good books. And I don't think that it really makes sense for China to force Alibaba to delist, because in the end, it actually does help China if Alibaba succeeds. Alibaba's kind of built its reputation to be one of the best businesses in China, and they want to give investors the opportunity to invest in that around the world, because that money will trickle down and help Alibaba, which in turn, like I said, will help China. Now this chart here may look like Alibaba's stock price, and it's not. It's actually their enterprise value to revenue. And we can see for many years, this company was trading at around a 10x. Then it got re-rated lower in late 2018 with all of the trade tensions and stuff to a 6x multiple. And now it looks like we're in for another round of re-ratings. Today, Alibaba sits at around 1.9x multiple, which is historically the cheapest it's ever been based on future growth and earnings. And maybe it permanently trades around these valuations going forward, or maybe once these fears subside like they're starting to today, it gets back up to its 6x multiple from before. Remember, it's still a strong growing business. Another interesting chart here to look at is their leverage free cash flow yield, which gives us a good idea of their free cash flow metrics. The last time this was this high prior to 2021 was a few years ago when Alibaba was in the $60 per share range, but since then the business has improved massively, and now we're at record levels once again for this metric. And remember, in this environment that we're in, with monetary policy tightening, governments around the world starting to pull back from all of the aid that we've seen in 2020 and most of 2021, free cash flow is king. And if you're looking at Alibaba and you're looking at a good investment for China, this company absolutely destroys it when it comes to free cash flow, and that should not be overlooked. Finally, we can glance at PE, because this is something investors love looking at. And again, we're sitting at record lows here, with previous bottoms being around the 20x forward PE, but now it's actually in the 12s. How much cheaper can this company get before someone like Buffett comes in and picks up a massive position in the stock? I think it's quite possible that Warren Buffett himself may actually open a position in this. As we know, his good friend Charlie Munger is already invested in this company through his daily journal. So I wouldn't be surprised if Berkshire Hathaway actually took a stake in Alibaba sometime this quarter. And if that does happen, I believe that would mark the bottom in the stock. But I'm not holding out on that. It's not really part of my investment thesis. I'm solely looking at this business, the opportunity, the market in China, and just the quality that the company produces with their financials. And I am absolutely impressed. I still hold my shares in this company, and I have added on the way down a bit, but I'm pretty much at the size I'm comfortable holding. So we'll just kind of wait and see what happens from here on out. I think there's a lot of investors just hovering over that buy button, just waiting for some positive news. And like we saw today, they click that as soon as it comes out, and that pops the stock violently. So if you are short Alibaba and you're betting against the stock still, maybe you could still make money here, as this could reverse and go even lower. But I'd be careful. I'd kind of manage that position quite closely now, because it's clear that if things clear up from this regulatory questioning, delisting questioning, and we just get some clarity on all of this from the US now, this stock could rally massive. Anyways, guys, hope this video was useful. If it was, hit the like button, subscribe for brand new here. Anyways, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.